In trading, it is said that the simplest strategies are the best ones. And to a certain extent, it is quite true. Especially for beginners. That's why I focus a lot of my videos on simple strategies that new traders can implement with ease. So in this video, I will be sharing some easy strategies that can be traded using a simple pin bar candlestick. But before we start, be sure to hit that like button and subscribe to our channel, so that you don't miss on any of our new videos. With that being said, let's get into today's video. First, let's talk about the pin bar candlestick. Most of the traders on YouTube, including me, have shown you hundreds of candlestick formations that you can use in trading. The problem is, it is quite a job to remember all of them. And even more difficult to identify them in real time. So, in this strategy we will be using only one candlestick formation. That is the pin bar candle. This is how the pin bar candle looks. We can see that the pin bar candle closely resembles a hammer. That's why it is also known as a hammer candle. Now, pin bars are strong reversal indicators. Therefore, if we can successfully identify a pin bar candle, we could catch a trend reversal. So, why does the pin bar candle work? Let us understand the logic behind it. So this green candle is a bullish pin bar. Let's say that the price was in a downtrend before this candle. Then on this candle, we see that the price opened here. Then the price went down and created a low at this point. When the price was at this low, there was a sudden change in momentum. The buyers saw this low price as an opportunity. So they started buying the stock in huge quantities. This leads the price to substantially rise and close above its open. We can also see that the candle closed near its highs. If we dive even deep, we can say that the sellers were able to push the price from the open to the low. But the buyers were so strong that they not only covered the ground until the open, but they crossed beyond the open and closed the candle around the highs. So, we can clearly see that the buyers covered more distance than the sellers. Therefore, the buyers overtake the sellers, and we can expect the price to make an up move. The same logic applies to the bearish pin bar. Let us assume that the price made an up move before this pin bar. Then, this candle opened at this price. Due to the previous bullish pressure, the price goes up and creates this high. At this point there was no signs of the sellers. When the price was at this high, the sellers saw this as an opportunity to sell. For some reason or the other, they started shorting the market. The sellers were so powerful that they not only reached the open, but they exceeded and closed the candle near its lows. So they overtook the buyers and displayed their intentions with the pin bar candle. Therefore, we can expect the price to make a down move here. Now, we need to understand one thing here. Every pin bar candle does not lead to a reversal. For instance, here we see that the price was in a strong uptrend. In this uptrend we see a lot of bearish pin bars. If we sold at each of these candles, we would have made huge losses. Hence, we need to take the background information into context, and then look for an opportunity. In other words, we cannot trade solely based on the formation of a pin bar. We need to look for confluence and confirmation. So here are strategies that can be used for the pin bar candle. Strategy number 1. Use support and resistance with the pin bar candles. This is a pretty simple strategy and the title speaks for itself. We will look for strong areas of support and resistance, and we will wait for the formation of pin bars at these levels. So here is a simple example. Here we see that the price was in an uptrend. The stock faced resistance twice at this price. So we marked this level as a resistance. Then, the price broke out of the resistance level and rallied. So now, this level has turned from resistance to support. Later on, we see that the price made a pullback right at the support level. At the support level, we see two pin bar candles that form in quick succession. This is a strong indication that the price may resume the upwards trend. So we buy here. We can keep our stop loss a few pips below the support level, and we can place our targets around the previous high. We easily achieved our targets on this trade. The reason for our success on this trade is that we took the trend and support level into context and waited for the pin bar candle to trigger our entry. Let's look at a sell trade. Here, we can see that the price faced resistance at this level 2 times. So, we could confirm that the resistance level was strong. Therefore, when the price came near the resistance level for the 3rd time, we expect the price to find resistance. And that's exactly what happens. We see that the price forms a pin bar candle right at the resistance level. So we sell here. We keep our stop loss a few ticks above the resistance level, and we place our targets near the recent lows. As you can see, there was a dramatic fall after our entry. So we made profits on this trade as well. Strategy number 2. Use trend lines with pin bar candles. Trend lines can be simply thought of as non-horizontal levels of support and resistance. Just like support and resistance, trend lines are also an integral part of technical analysis. Trend lines are used to identify the direction of the trend and helps us in identifying areas of support and resistance. We will use these trend lines in confluence with pin bar candles to identify trade opportunities. Let's look at an example. Here we can see that the price found support twice on these levels. So, we stretched a trend line across by connecting these levels. Later, when the price came near the trend line, we expect the price to find support. We are now looking for a pin bar candle to form near the trend line. Here, we have a beautiful pin bar candle form right at the trend line. So, we have a confluence of pin bar and trend lines. So we buy here. We will keep our stop loss below the trend line, and we can keep our targets at the previous highs. As you can see, the price gave a strong move after our entry. Let us now look at a sell trade. Here we see that the price found resistance twice. So we stretch a trend line to mark these swing points. Now, when the price returns to the trend line for the 3rd time, we expect the price to find resistance at this level. So we will look for selling opportunities. Here we see that the price forms a bearish pin bar right at the trend line. This is a strong sell signal. So we sell here and we keep our stop loss above the trend line. We place our targets at the near-term lows. As you can see, the price gave a strong down move after our entry. So here I have given you 2 strategies that you can implement from today and reap rewards. The pin bar candle is a powerful candlestick pattern. You can use it with confluence of other indicators to create your own strategies. If you like this video, then be sure to hit that like button and subscribe to our channel so that you don't miss on any of our new videos. See you soon.